Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. If you enjoyed today's video, hit like, hit subscribe, and that way you can see future videos as well. So this video is going to be a stock analysis for the Daily Journal Corporation. Now, I first heard of the Daily Journal Corporation because I heard it was this annual meeting that Charlie Munger held every year, and you could go and ask him a bunch of questions, just like you can do at the Berkshire Hathaway meeting, only it's a little bit more kind of Charlie Munger focused. Now, the interesting thing is when you dive into the actual business of the Daily Journal Corporation, there's some really interesting stuff going on. There's sort of like a dying newspaper business, there's a really large stock portfolio, and there's also a very new kind of software as a service kind of subscription model type business in there as well. So a few really interesting things going on, and I want to get into that business today and kind of talk through some of my thoughts with it. So I do hope you enjoy that. Before we get into the Daily Journal Corporation, we do have a sponsor for today's video, and today's sponsor is Hatch. Now, as many of you will know, Hatch have been my broker of choice for me making my US investments from here in New Zealand. I initially switched across because of very low fees, and Hatch actually has even lower fees coming very soon because they're launching kids accounts in early 2021. As we all well know with investing, time is your friend, and the earlier you can get started, the longer you have to compound any money that you invest in the stock market. And being able to set up an account for your kids with very low fees, as low as 50 cents per transaction in order to buy or sell shares, can be a great way to sort of build a nest egg for your kids very, very early on. So Hatch are the sponsor of today's video, and if you're interested in getting started with Hatch, you'll need to go to the link hatch.as/investingwithtom. If you go to that link, deposit $100 into your account, you'll get a $20 top up so that you can get started investing with a little bit more cash. Okay, and as per usual with these stock analysis videos, nothing in this video is intended to be personal financial advice from either myself or from Hatch for that matter as well. So the Daily Journal Corporation actually has a really interesting backstory. Back in 1977, it was acquired by Charlie Munger and his business partner at the time, Rick Guerin, who unfortunately has recently passed away, for $2 million. Now, the Daily Journal Corporation has since grown to around $430 million in market cap today, which is 13% compounded for 43 years. So massive return. It turned sort of every dollar invested in the business into about $210 from 1977 through to 2020. So it's got this weird sort of dying legal paper sort of business built in, but even that aside, it's been a great kind of compounder over the long term. So I decided to dive into kind of what's going on with the Daily Journal Corporation after actually listening to a podcast. I listened to a podcast from Toby Carlisle, and he sat down with Matthew Peterson from Peterson Capital Management. He is invested in the Daily Journal, gave a very quick kind of overview of his thesis on the business, and I found it really interesting, so wanted to dive into what Matthew Peterson had found, and a lot of the numbers that I reference in this video actually come from a presentation that he did, which again I will leave linked down in the description below. Okay, so this video is going to be split into sort of 3 or 4 main parts. Firstly, we're going to talk about each of the components of the business, that being the legal newspaper, the stock portfolio, and also Journal Technologies, which is kind of the new sort of software as a service component of the business. And then at the end, we're also going to talk about the valuation of the company, like I always like to do with kind of these individual stock analysis videos. So firstly, let's get the newspaper business out of the way. So basically, the Daily Journal Corporation for a long time has been this provider of legal news in California. It's a very niche market. For a long time, they had a monopoly on that business. It sort of printed money. Every law firm in California had to buy this legal newspaper that kind of reported on happenings in different courts around California. But it's been disrupted by technology, just like almost every other newspaper business in the world, frankly. And currently, it produces about $1 million a year in cash flows pre-tax for the Daily Journal Corporation, and it's on a very steady decline. So in terms of the analysis for today, I'm basically just going to say that the Daily Journal Corporation is worth 0. It's probably worth a little bit more than 0, but for the Daily Journal Corporation today, I think it is quite a misunderstood business, and a lot of people still focus on this newspaper component, but really that is irrelevant to the long-term future of the business. So I'm going to say that it's worth $0. It's steadily disappearing, and it will continue to die a slow and painful death, to be perfectly honest. And the other parts of the business are much more interesting and much more valuable. Now next, let's talk about the stock portfolio. Now anyone who's ever watched a sort of 13F update video from myself will have seen that in those videos I actually talk about the Daily Journal Corporation stock portfolio because it's managed by Charlie Munger, and the stocks that we usually talk through in that video are very minimal. Basically we talk through Bank of America and Wells Fargo and also POSCO, because those are the only three holdings that show up in the 13F for the Daily Journal Corporation. Now the interesting thing is that although those three stocks make up quite a large percentage of the Daily Journal Corporation portfolio, they also have one or two international holdings. And as you read through the annual reports and the 10Qs as well for the Daily Journal Corporation, you get basically very, very minimal disclosure on what that company could actually be, or what those couple of companies that are overseas could actually be. It's never disclosed outright in those annual reports, just because it doesn't have to be, as far as I understand. So it's really tricky to find, but there are kind of two ways that people have been able to kind of figure it out. So basically each quarter the Daily Journal Corporation will report the value of their stock portfolio, and it will mention the dollar amount if they've bought or sold, but it won't mention the actual company name. Well, there's two ways that we can find out what those stocks are. The first way is people actually have been doing some really hard work in terms of monitoring price movements in the Daily Journal Corporation portfolio and trying to match that to particular stocks and tracking kind of the movement of the total value of the stock portfolio over like a 10-year period, and trying to figure out a group of stocks that could potentially explain that same movement. And you got down to a very small group, and basically the two stocks that people are kind of thinking here is, the first one is BYD, and they think that that is by far and away the most significant component of their non-US holdings. And the other business that they're thinking is actually Hyundai. They think that's probably quite a minor component of the overseas holdings, but that is sort of theorized to be the other stock that is in that portfolio. Now, the other way that we can find out what those stocks are is we can have one of the management team tell us. And in the case of BYD, we have had Charlie Munger tell us. In his annual meeting, he's mentioned a couple of times now that the Daily Journal Corporation does own some BYD shares. They own the H shares on the Hong Kong Stock Exchange, is what people have kind of been able to figure out. But he's never actually outright said how much or what his cost basis is or anything like that. But if we know at least that part of the story, we know that it's BYD. People have been able to work backwards and figure out to a pretty accurate extent, I think, how much BYD the Daily Journal owns, and then kind of what impact that's likely to have on the corporation's portfolio value moving forward. Now, there's going to be kind of one key theme right throughout this video, and that is that in certain parts of the business, even quite important parts of the business, there is quite minimal disclosure. I think a lot of companies would probably struggle to get away with this if it wasn't like a superstar management team with Charlie Munger and Peter Kaufman and formerly Rick Guerin and those kind of guys on the board of directors and running the business. But we do have those guys on board, and really they just don't get grilled on what's going on. People are more interested in asking Charlie Munger, general questions about investing in life at the annual meetings. But with all that said, one of the first things that isn't necessarily disclosed, which could potentially have a big impact on the underlying value of the Daily Journal Corporation, is to do with the stock portfolio, and in particular BYD. Now, at the time of their last 10Q quarterly report, the Daily Journal Corporation reported a portfolio value of a little over $153 million. So we know how much comes from the US holdings. We know how much of that is Bank of America, how much is Wells Fargo, how much is POSCO. So in my opinion, the balance is largely BYD and potentially a little bit of Hyundai kind of mixed in there as well. So one of the interesting things that has happened since that last 10Q is that BYD has gone up a lot. And in my estimate, estimate, it's probably added north of $100 million to that stock portfolio. So I'll put some screenshots up here so you can kind of see my assumptions, and I'll also put up a BYD stock chart so you can kind of see what I'm talking about there. But in my estimate, and again, these are just estimates because we don't know the exact amount of BYD that the Daily Journal owns. In my estimate, probably the stock portfolio since the last 10Q has gone from about $153 million all the way up to about $280 million. And since that 10Q was reported by the Daily Journal Corporation, really the stock has not moved to reflect that at all. So super interesting way to potentially kind of arbitrage your way into one of these electric vehicle companies in BYD. And it reminds me a lot of Monish Prabrai's investment in Silicon Valley Bank, where he invested in a high quality bank that was trading at a reasonable price for a high quality bank. But it had this kind of built-in, I guess, free lottery ticket, as Monish Prabrai might call it, where you have all of these stock options from the dot-com bubble back in 99, 2000 that weren't flowing through the financial statements yet. So kind of reminds me a little bit of that situation, which certainly caught my attention. Now, outside of the stock portfolio, the Daily Journal Corporation also has about $9 million in cash, probably getting closer to $10 million at this point. They also have a real estate sort of portfolio, or real estate assets of probably 15, 16 million. They also do have a little bit of debt. They have about $30 million in a non-maturing margin loan at a very low interest rate, like 2.5%. They have a lot of deferred capital gains tax because they haven't sold any of their holdings that they've got massive gains on for a long time. And they've also got about $2 million in like basically a 4 or 5% interest rate mortgage. So if you back all of that stuff out of the stock portfolio and add in the cash and the real estate assets, you're looking at about a net kind of liquidation value of all of those assets, of the stocks, the real estate, the cash, paying all your tax obligations, paying off all your debts, everything like that, of about $225 million. The market cap of the Daily Journal Corporation today is about $460 million. So it means that you're basically getting the business, after you back all of that stuff out, for about $235 million. So the final step for me in this analysis was to try and figure out what is the business worth? Is it worth $235 million? Is it not worth $235, or is it worth a whole lot more than $235? So we've already discounted the newspaper business to zero. So this is really going to fall into the ballpark of the Journal Technologies kind of software business. So let's get into some of the details there. Again, a bit of a theme of this one is going to be that there's not a whole lot of disclosure, and it's not yet flowing through the financial statements to a pretty large extent as well. So again, a very interesting one to dig into. So let's get into some of the details on that. Okay, so Journal Technologies is this sort of software as a service business arm of the Daily Journal Corporation. And basically what they do is they've, I guess, pivoted. There's a buzzword for you. They've pivoted quite a bit in terms of their business model, but they're still sort of operating in this legal kind of area. So basically what the technology that Journal Technologies sells, the software that they sell, basically what it does is it is sort of administrative software for courts. It essentially replaces humans to a large extent, tries to cull out a lot of the human error mistakes that courthouses, for example, often make, and it's about automating a lot of their processes and becoming more efficient kind of operators. So the value proposition for that software, frankly, is it's a lot cheaper than employing humans, and software tends to make a lot less mistakes than humans tend to do. But it's certainly not the easiest business in the world, and I want to just give you a few sort of Charlie Munger quotes from the last Daily Journal annual meeting to try and give you a feel for the way that Charlie Munger is kind of thinking through this. Now, keep in mind, in my experience, Charlie Munger does have a bit of a gift for trying to sound really pessimistic about future business prospects in order to kind of outperform what he had initially kind of thought they would do. But here's kind of a few things that he said. So he said it's a very difficult business. They're servicing different kinds of government departments, and I also sort of picked up that some of these government departments require a lot of kind of customization. So the software needs to behave slightly differently for the customers in South Australia or Victoria in Australia than it does their customers in California in the US. So that's kind of a difficult aspect of software, having worked in a software business for a period of time. the ideal kind of business model for software is that you make one version of your software. You know, you make Microsoft Word, for example, and you can roll that same piece of software out to, you know, every customer in a country, if not every customer in the world that might need Microsoft Word. Now, what Charlie's talking about here is that the software actually needs to behave slightly differently for each large customer, and that can add some degree of expense, but it also keeps a lot of the large competition away. You know, this is not an area that the Microsofts or the Googles of the world tend to operate in. They tend to like to pump out very consistent software that can be basically sold to everyone, and once they've developed it for the first time, basically any extra sales over and above that is just money in the bank. Now, some of the other things that Charlie Munger mentioned is that they're working with very bureaucratic organizations. They're working with lots of governments, lawyers, and consultants, and we all know that Charlie Munger has kind of a pet peeve for compensation consultants, amongst many other types of consultants as well. But he did say, in spite of all those difficulties, we've done fairly well, and it was kind of a miracle. It's a big market, and it won't be easy, and it won't be fast. But they have had some wins recently, and they are now operating at all of the courts of Victoria in Australia and also South Australia. Those are two of the states of Australia for anyone that doesn't know. And he actually came out and said, "I've fallen in love with the government of Australia." That is a quote from Charlie Munger. Part of the reason we've been so successful is because many of our competitors are so awful. It'll be awful, but I suspect it'll keep growing. Those are a couple more quotes from Charlie Munger. So why is this a business that I said still has minimal disclosure and still isn't quite flowing through the financial statements? Well, here is sort of the business model for Journal Technologies. Basically, Journal Technologies software that goes into these courthouses and so on is a subscription model, and they are very long-term subscriptions. They are 10-year subscriptions typically is what most customers have been purchasing from the Daily Journal Corporation. Daily Journal do receive some money up front for helping these courthouses and so on to establish their software and get everything customized and kind of set up. But largely, the Daily Journal Corporation is really deferring gratification here with a lot of these businesses. Now, a lot of them, they're helping them set up up front, like I say, but they're not receiving a lot of money till several years into this kind of software subscription, until the courthouse is up and running, and that kind of allows the court to have minimal costs up front, and it also kind of locks the Daily Journal Corporation software in for a long period of time. So it's kind of a benefit on both sides of the equation here. And this also seems to me like the kind of software that is going to be really, really sticky. If you ever worked in a business where you have to change the software that you use internally, or you do some kind of migration to another system or something like that, in my experience, that can be a nightmare. So to me, this seems like really sticky software, and to have people, you know, locking themselves into 10-year subscription kind of contracts is a really interesting proposition, and certainly a setup where we should continue to see the Daily Journal revenues grow out into the future fairly consistently. I mean, with these Australian contracts, for example, Matthew Peterson was able to do some digging and find that those contracts are probably worth about $90 million over a 10-year period, for example. And again, I'm going to give another shout out to Matthew Peterson at Peterson Capital Management here, and I'm going to put up one of his slides. Now, Matthew Peterson went and did some digging and found basically a large list of the customers that Daily Journal Corporation have managed to get onto their software, and he found more than 100 contracts that had been set up for some of these 10-year long subscriptions. And in his opinion, he sees a road to north of $150 million in revenue in 10 years' time, conservatively. And he sees that as very high margin revenue. Like I say, there's a lot of upfront kind of grunt work for Daily Journal to get these customers up and running and trained and get everything kind of tailored to that particular customer. But after that, it's all gravy, and we've got very sticky software. So we potentially have a path to $150 million in revenue, potentially at quite high margins, again, because once you've kind of got all the grunt work out of the way, hopefully it should kind of be all gravy, besides kind of some support costs and those sorts of things right along the way. So Matthew Peterson sees a fairly conservative path to $150 million in revenue with fairly high margins. So then it sort of gets into how do we figure out how to value a software as a service business. Now anything software as a service related here in 2020 has an enormous value. It's valued through the roof. People are talking about price to sales rather than price to earnings. Many of these companies are burning cash, but people are paying massive multiples for them because they expect all this growth, and your valuation doesn't matter anymore, and you can almost pay as much as you want and still make money on the back end because of all this growth. That's kind of where we're at in 2020. But I don't think that's how we should value a software as a service business personally. So let me give you some of my thoughts on how we could potentially go about valuing some of that back-end revenue that the Daily Journal Corporation is likely to produce. Okay, so let me give you some basic thoughts on how I would do a very simple kind of back-of-the-envelope calculation on Journal Technologies. Now, like I say, Matthew Peterson expects $150 million in recurring revenue. Again, we'll continue to see whether that story comes true over the next few years because, again, there's very minimal disclosure and it's really hard to actually kind of figure this stuff out, and he's done a lot of the back-end grunt work here. So $150 million in 10 years, margins to exceed 25%, again, quite conservatively. So if you run the numbers on that, that gives us in and around sort of $40 million in pre-tax earnings, pre-tax kind of cash flows from this business. So how do we work backwards and figure out what that $40 million in earnings in the future is worth today? Okay, so the very basic maths I'm going to do on this, and again, I'll maybe split the screen here and kind of show you just my iPhone calculator to sort of walk you through how I'm doing this, is basically I'm going to assume that if we've got a business that has recurring revenue of about $40 million a year, and it's growing, I think we could quite easily argue that we could get probably about 20 times earnings for that in the market. So you could argue that multiples are kind of easy to just slap on companies and be either too optimistic or too pessimistic. But I think that's probably a reasonable assumption, is call it 20 times earnings. Now, if you take that PE of 20 and multiply it by our $40 million in earnings, that gives you an enterprise worth around $800 million in 10 years' time. Now, if you work backwards and try to figure out what that's worth today, again, being fairly conservative, if we discount that back at, say, 10% per year, then that takes you back to about a $300 million or so kind of value today. And that is purely just looking at the terminal value. So that's if we buy that asset today, we want a 10% return per year, and then we sell it for this 20 times earnings out into the future. That's kind of what it would be worth today, a little over $300 million. But that doesn't account for the cash that gets generated in the meantime and kind of accumulates there as well. So probably conservatively, we're talking about $300 million here. So if we try and tie this whole picture together, what we've got is we've got a newspaper business that we'll assume is just worth zero. For argument's sake, it's kind of very small in the grand scheme of the whole story here. We've got a stock portfolio as well as cash and, deferred capital gains and a few debts and things to pay off. But a liquidation value of kind of all that stuff of about $225 million. And then we've got this growing software as a service business that is probably worth at least $300 million. So add all of that together, and we get an intrinsic value of probably in the mid kind of $500 million range, maybe $500 to $600 million. And the Daily Journal Corporation currently is selling for about a market cap of $460 million. So for me, a really, really interesting analysis to try and do. The very obvious question is, how realistic is this software as a service business scaling up to $150 million in revenue per year, and how realistic are the margins and so on? And frankly, I don't know. We are just going to have to watch and see what happens. We really haven't had any management commentary that I've seen on this. The Daily Journal Corporation does not have an investor relations department, and it's not something that I currently own shares in either. But it's a really interesting scenario, and certainly one that I will be keeping an eye on. I think for me, it's probably one of these businesses to where if the stock portfolio continues to do really well and it's not quite recognized in the stock price of the Daily Journal Corporation itself, and we can get that Journal Technologies for as close to free as possible, that's probably a situation where I'm going to get really interested, because we'll have a lot of downside protection from just the value of the stock portfolio and the other assets that they have. And then we had this sort of built-in potential upside through the Journal Technologies business if that does get executed on really, really really well. Oh, that is it. That's my overview of the Daily Journal Corporation. Certainly one of the more challenging businesses to look into that I've looked at recently, but it's really exciting. I think it's this company that a lot of people just see as the place to go and watch Charlie Munger and, give him a few questions on his investment career. But underlying that, there is actually a really promising looking business kind of coming out of it. So interesting one to go through, and I do hope you enjoyed that. I'd love to hear any comments you have on the Daily Journal Corporation below. Have you got any thoughts on the software as a service business? Is it something that you've looked into before? Would love to hear your opinion on that. But that's all from me today, and I will see you in the next one. Cheers.